will buy the same stocks today we were buying last week. It's just I won't tell you their names.
But would you buy more if you get them down 500
The cheaper
points?
they get, the more I buy.
But it doesn't mean that you don't think the markets could go down further.
No, I'm not
from
buying
here.
them because I think they're going to go up the next day or the next week.
Yeah. So it's something you're watching very closely?
Yeah. Oh, yeah, but we watch the prices of things we do more than current events. Mm-hmm. Because in the end, we aren't buying them because what's going to happen next month or next quarter. You know, we're really buying them because we think they'll be good businesses 10 years from now. If somebody came to us with a good business today, we'd buy it. And we'd buy it regardless of what's going on in the tariff situation. We might have, won't be the case, but we're more likely perhaps to get something when other people are fearful. And you see that in a big way instantly in a market, in the market for businesses. But it's still there with people's mind. You can always pay too much for a business. And I've done it with stocks many times. I've done it with businesses. We've got at Berkshire, we have at least a half a dozen businesses. And I can't even use a we there. I got to say I pay too much. So, and if we make the next 10 deals we make, there will be a couple where it'll turn out that I paid too much.
You're looking at the markets down almost 500 points this morning. And for people who are just waking up and just kind of trying to figure out what this means for them, for their portfolios, for their businesses today, I'm sure they've got some questions. What can you tell them? What do you say when you look at the markets, I guess, down 460 points right now for the Dow?
Well, I'm saying if you own a farm and you're worried about selling your farm because you read the newspaper this morning, or if you own a perfectly decent business in your town and you're worried about you think you should worry about selling your business today because then you should worry about thinking about selling stocks. But if you look at stocks as businesses that you own little pieces of, why in the world should you sell it based on headlines of any sort? I mean, if you expect a farm to be a good investment over 10 years, if you expect an apartment house to be a good investment over 10 years, and if you own a marketable security, which is an interest in a business, and you expect that business to be a good business over 10 years, it's nonsense to get feeling good or bad about what stock prices do in a day unless you have extra money and they go down and then you feel better because you can buy more of them cheaper. Just like if you could buy the farm right next to you cheaper, you'd love that if you were a farmer. You
know, usually that's an analogy that I understand and agree with, but this time around, a farm in particular, I would be pretty worried if I was a farmer trying to figure out if I should be planting soybeans or if I think I'm going to be able to make enough money to get things back this time around. Yeah. Tariffs have hit the farmers particularly hard, and a lot of them have said they're behind the president. They want to see us get to a better situation, but many of them are also in a position where, look, they've already been asked to give a lot. They thought we were about to reach a deal, and they're hoping that when they're making decisions for this planting season, they have some clarity.
Well, it is true that business generally has improved, markets improved, and everything, and the farmer has not participated in that. So this has been a very good economy for a long time. I mean, we've been coming back for 8 or 9 years, and businesses kept getting better. Interest rates have been low for business. Stocks have gone up, and the farmer has not participated the same way. So maybe I shouldn't have used that example, but if you have a decent business, I mean, you buy into a business. You don't buy a stock that wiggles around, you know, and people understand that, but then they behave as if it's bad news when the price goes down. If you had a half interest in a wonderful business, and the person that owned the other half came in and they were depressed by these headlines today, and they said, I'll sell to you my share of the business a lot cheaper than yesterday because I think this whole thing is going to just end the world. You just say, here, I wish you weren't so depressed, but but if you're selling it to me cheaper, you know, the business is going to be here 5 years from now and 10 years from now. And all headlines, you don't know what the world's going to look like in 3 years or 5 years or 10 years. What you do know is that the United States is going to grow over time and that businesses are going to generally do well. And if you own decent businesses, you'll make money. You make business decisions, but you don't make a decision about whether to buy or sell the business if you've got a good business. And you've got to, if you're going to own a business for 10 years, you're going to see a lot of terrible headlines. You know, I bought into my first business in 1942, and they didn't notice that I did. But just imagine all those headlines at that time, and the world, the Philippines were falling. I mean, we were losing the war, and but the United States is going. Your kids are going to live better than you did, and your grandchildren are going to live better than they do. And generally speaking, productive assets are going to be worth more in this country. And if you own a diversified group of productive assets, you'll do fine as long as you don't read the papers. Whenever you buy a stock, let's say you're buying General Motors, 1.4 billion shares out. We'll say the stock's 40, it's a little below that. You should be able to take out a one-page sheet of paper and say, I am buying the General Motors company at $56 billion because. And if you can't answer that question, if you can't write that out, then you'll go on to something else. And if you're buying Berkshire, you have to say, I am buying Berkshire Hathaway at $500 billion because. And if the answer isn't something you can write, you can't say I'm buying it because my neighbor thinks it's going to go up, or because everybody's talking about it on CNBC this morning, or whatever it may be. That's the question you answer. Now, when you buy groceries, buy everything else, you can answer that question. But if you can't answer it on something that you're involving your savings of many years for, why in the world should you be doing it?
I look at a lot of figures just in connection with our businesses. I like to get numbers, so I'm getting reports in weekly in some businesses. But that doesn't tell me what the economy is going to do 6 months from now or 3 months from now. It tells me what's going on now with our businesses, and it really doesn't make any difference in what I do today in terms of buying stocks or buying businesses. What those numbers tell me, they're interesting, but they're not guides to me. If we buy a business, we're going to hold it forever. So we're going to have good years, bad years, in between years, maybe a disastrous year some year. And we care a lot about the price. We do not care about the next 12 months. I've been surprised by all kinds of things in the last 10 years about the economy. I mean, I don't think there was any economist I've ever read that talked about negative interest rates for long periods of time. I mean, if you go back and read Keynes, or you read Samuelson, you read any of them, they do not get into a negative rate environment. I think now there's still 11 trillion that's of government debt around the world that's at a negative rate. So we've never seen it before, and we've never seen, at least the conventional wisdom on a sustained period of long and growing deficits while the economy is getting better, extremely low interest rates, and really very little inflation. So something different is happening, but something different happens all the time. So, and that's one reason economic predictions just don't enter into our decisions. Charlie Munger, my partner, and I, in 54 years now, we've never made a decision based on an economic prediction. We make business predictions about what individual businesses will do over time, and we compare that to what we have to pay for them. But we have never said yes to something because we thought the economy was going to do well in the next year or 2 years, and we've never said no to anything because we were right in the middle of a panic, even if the price was right. And I just don't know of any economist that actually has bought businesses successfully or done well in stocks. Paul Samuelson did. And you may know he was a big shareholder of Berkshire, but it's, they make guesses, and there's so many variables. I mean, in the hard sciences, you know that, if an apple falls from a tree, that it isn't going to change over the centuries because of anything, or political developments, or 400 other variables that go in. But when you get into economics, there's so many variables, and the truth is, you've got to expect good times and bad times in business. And if you were to buy an auto dealership and you're, wherever you live locally, or a McDonald's franchise or anything like that, you wouldn't try and time the purchase. You'd try and make the right purchase at the right price, and you want to be sure you got a good business. But you wouldn't say, I'm going to buy it because growth this year is going to be 3% instead of 2.8% or something of the sort. If you're working in something where you're living off your your paycheck from week to week, you want to have a little cash around, and you certainly don't want to have a credit card that's maxed out or anything like that. But if your house is paid off, if you don't have big living expenses, you got a portfolio of decent diversified businesses, you don't really need any cash. I've got responsibility. We've got insurance claims. We could have hurricanes that would happen. All kinds of things where we might have to pay out billions of dollars. And I've got over 1 million people that own shares that are counting on me to run the place so we get through periods like that. But if I were retired, I had say $1 million portfolio of stocks that was paying me $30,000 a year in dividends or something of the sort, and my children were growing, the house was paid off and everything. But, I wouldn't worry too much about having a lot of cash around. Well, if you have to closely follow a company, you shouldn't own it.
Really?
No, if you buy a business, if you buy a farm, you go up and look, every couple of weeks to see how far the corn is up, and you worry too much about whether somebody says this is going to be a year of low prices because exports are being affected or anything like that. You buy a farm and you hold it for. I've got one farm that I bought in the 1980s, and my son runs it, but I've been there once, it doesn't grow faster if I go and stare at it. I can't cheer for it, more effort or something like that. And I know there's going to be some years when prices are going to be good and some when the prices aren't going to be good. I know there's years when yields will be better than others, but I bought the farm. And if it just doesn't, I don't care about economic predictions on it or anything of the sort. I do care that over the years, it's well tended to in terms of rotating crops, and I hope yields get better, which they generally have. In fact, that farm 100 years ago would have probably produced 30 bushels, maybe 35 bushels of corn per acre. And now in a good year, it'd be 200. We've really made progress in this country. That's one reason commodity prices, if you go back a couple hundred years, they've moved so little, is because we've just gotten better and better at whether it's cotton or whether it's corn or soybeans or all kinds of things. And you and I have benefited from that. If you own the best auto dealership in town, the best brand, and you had somebody good running it, you wouldn't drop by every day and say, how many people have come in today, or, I think interest rates are going up a little, maybe it'll slow down our sales or anything. No, you buy it knowing there's 365 days a year, and you're going to own it for 20 years, so that's 7,300 days, and things are going to be different from day to day and year to year. You shouldn't buy it if the day-to-day stuff is important. We do not prepare financial statements monthly for Berkshire, and there's just no other company would do it. But there's no sense doing it. I know where the money is, and I know how the companies are doing generally. But what difference does it make? Because I'm not going to try and hit any number for the quarter by having a sale on insurance or doing something even worse. And Charlie, he knows where we stand, and we know what businesses are doing well, which aren't, and we certainly know where the money is. If you go back to when I started my partnership in 1956 that Berkshire came out of, there were 7 people sitting there at a table having dinner, relatives primarily, and I said, here's the partnership agreement. It's done under Nebraska law. It's 4 or 5 pages. You don't need to read it. But I said, here's a little half-page, what I call the ground rules. And I want you to read these. And if you feel okay about that, about the interaction, what the expectations are, and all of that sort of thing, then we'll join forces. And if you don't, it's fine. Other people have, but we shouldn't be partners. If I'm going to have a partnership with somebody, I want it to be compatible. It is, and when you have a public company, you can't control who comes in. I can't control some guy that comes in and thinks we're going to pay big dividends or split the stock or something like that. So by my actions and my communications and everything, I want to attract the people that from the public market that I want, and I want to keep the others away. Costco was built. Saul Price, who started the Price Club and that thing, he sat down and figured out the customer he didn't want. And he set up a system that would keep away the customer he didn't want. Who did he not want? He didn't want somebody buying a quart of milk with somebody behind him with with a basket of $200 worth of goods waiting for that. So we put in a membership fee, and by putting in a membership fee, he killed all the drop-in business, the business that belonged to the 7-Eleven. We want Berkshire to keep out people who have expectations about us that are different than ours. I mean, good for them, and I hope they find somebody they fit. But if you're going to run a church, you want your seats to be filled by people that are generally want to listen to your form of religion, and you don't want it to change every week and say, gee, I need a new group, and I'll go out and talk to a bunch of investors and get them to come to my church this Sunday, because there's only so many seats in the church. There's 1,645,000 or so A equivalent shares, and those are the seats, and I want them occupied by people that are on the same page I am.